Hello, everyone, and welcome to another Southern California housing market podcast. This is for December 22nd, 2020. I can't believe it. We only have one more episode left before the end of the year. My name is Stephen Mead with Domicile real estate for people who love houses. And this is our market update for Southern California, which includes, for our statistical purposes, Los Angeles and Orange counties. And we put in here in the description, and something I wanted to talk a little bit about through this is, I was having a conversation with someone at a virtual happy hour, which is always kind of an interesting experience. And the person told me that he doesn't trust anybody in real estate because lately they've been saying that it's a great market for buyers and for sellers. And he opined that it must be one or the other, right? Like it must be really advantageous for one group of person and not necessarily for the other. That it being a good thing is sort of mutually exclusive, right? It can't be good for both at the same time. And I actually kind of refute that. Of course, the corollary is true. There could also be a situation where it is a bad time for both, right? But anyway, we're going to kind of talk about that as we read through our statistics this week. One of the things that I think about as I look at these, and as we get towards the end of the year, I start looking backwards and kind of thinking about and reflecting back on the year as a whole. And one of the thoughts that came to mind is, as human beings, I think one of the things that we suffer from is that we're not always able, we are so relative and pragmatic that we're not always able to sort of judge things sort of on the long run, right? So like, for example, if interest rates were to go up to 4%, which would be over a 1% rise, people would be throwing up their arms in despair. Whereas, historically, 4% is extremely low. So one of the things I find is that people aren't always able to sort of look at things on the whole. And I think that's what I've been trying to do when I've been looking back at our statistics. And the reality is, when I look at where our market is right now, this second, I actually think this is probably one of the better weeks for buyers out there in an ultra competitive market all year. I think this is actually really a wonderful week to buy a house if the house you're looking for is out there. And I think that's kind of the one big caveat, is that our inventory levels are pretty low. But without further ado, let me jump into kind of our slides here, and we can kind of start to go through things. So our first slide is, of course, this is our measure of supply, right? Like we're talking about supply and demand. This is the supply. We see the new listings that we have. And, if you look relative to sort of the peak period a few months ago, we're down probably 25% in our under $1 million category. We're down around 50% in our $1 to $2 million category. This isn't entirely surprising. The reality is sellers especially don't really like to sell around the holidays. But the next chart I'm going to show you really puts something in perspective. And this is compared to 2019. If you look compared to 2019, last year, this exact same week, which was around Christmas week, 848 new listings versus 1,456. And, one of the things is there's a couple ways that you could interpret this, right? Like one way of interpreting this might saying, oh my God, the market is being flooded with new listings. That's possible as well. But the other thing you might be thinking of is that, perhaps the market is delayed this year. And I think that's kind of a theme we've seen all year long. We didn't really get a spring this year. We kind of had our spring in the summer, we had our summer in the fall, and I feel like we are having our fall in the winter. And then the cycle will kind of reset around January, which is my prediction. Now, if we flip to the other side of things, which is new escrows, again, we are down a bit versus the summer. And as a whole, I think we might even be down a little bit more. Whereas in our 1 to 2 million, we're not down nearly as much versus our sort of peak time a few months ago. We slipped a little bit versus last week, but I mean, frankly, these are still, as you saw by the graphs, incredibly healthy numbers that we were looking at there. So if you look here and you look at our new escrows, which I think is also just as important, one of the things that you see here is, again, where this graph is been zoomed in a bit. If we're comparing, to last year. We've zoomed in a bit, but again, you can see we're still up by a pretty decent amount. Like this is definitely over a 10% increase versus last year. And the big thing is, these absolute numbers are interesting and all, but really what we want to do is we want to reconcile that notion of supply and demand. And if we are looking to reconcile that notion of supply and demand, we do that with an absorption rate. And basically, what we're trying to do is we're trying to figure out how many homes went into escrow versus how many came on the market in the same price range. And one of the things I've talked about a little bit is that in this market where we have very low inventory, there's kind of this weird like caterpillar seesaw effect, right? Like the caterpillar moves forward, the front and the back follows, and it kind of seems to work that way. But as you can see, this absorption rate for under 1 million, the last couple of weeks, we've settled into this 80% range. That's what I call still a very competitive seller's market, but it's not necessarily a nuts crazy market. Like we've seen is, when you approach 90%, that's kind of really a different ball game. But if we go over here to 1 to 2 million, we're actually seeing that number hit 100%. And what that means is that the buyers really haven't cooled in the winter nearly as much as the sellers have. I think as you get into higher end properties, sellers are less and less likely to have their plans disrupted around the holiday period, and they won't put their house on the market. Now, what's interesting though is the buyers don't seem to share that same trait, and that's why we're seeing 100% on that absorption rate. Now, if you look at our average pending list price, this is a statistic that I think, we really wanted to capture what's happening in the market right now, because we don't get sold data for about 30 to 40 days until after a contract was negotiated, whereas a pending data is actually much more current. What's interesting about this, though, is that this jumps around a lot. This is not a very fluid or smooth movement. And sometimes I think when you look at the whole, you can glean some information. And I'm going to go off the share here for a second, because we're looking to make some real serious changes in some of the stats we track and why we track them. If the only thing you can really look at a graph is how it's doing over time by looking at sort of this long trend line, well, that sort of defeats the purpose of using the most recent data, doesn't it? Because I think the point that we're trying to figure out is what direction our price is heading, right? Like that's the information that I want to know as an agent. That's kind of the information I'd imagine consumers want to know. Are prices heading up, going down, or staying about the same? And we were hoping that this statistic would give us a little bit of insight, but it's not proving out to, it's not doing it the way that we had hoped. It moves around too much. It's not a very fluid movement. We can't glean as much as we were hoping to. Now, one of the things that we've been tracking that I do find very interesting is this list to close ratio. Now, remember, because this is based on closed data, we're looking backwards 30 to 45 days, and that did slip a little bit. In fact, this is the lowest number that we've had since back in August. But I also think it's still interesting to note it is still well above 100%. And that's really remarkable when you think about it, right? That means that on average, homes are selling for above list price. That means if you're looking in the $600,000 price range, the average home is actually selling at 606 if it was listed at 600. And that's nuts to me, right? Because, even in an up market, what tends to happen is you find that sellers eventually start to get sort of greedy, and they will start doing sort of outrageous prices, right? Like just like, make me an offer kind of a price. And then they'll eventually, end up accepting less than that, right? Because they'll get a qualified offer, but it won't be for that inflated list price. What we're finding is that's not really happening so much in this kind of a market. People are still pricing almost cautiously, right? Like they want the bidding war. They want to know their house is going to sell. Now, if we look at our average pending list price for our 1 to 2 million category, again, it's the same problem, but only amplified, right? We have these kind of wild movements, and it's a little bit hard to see a big overall trend. And I think for our 2021 sort of stats, we're going to sort of revamp that. I'm working on a couple things. We have to do some data modeling and see if they kind of produce the sort of price predictability or indication that we're looking for. Now, finally, we have our days on market. And, this is, again, that I'm going to go off share because I love doing this actually in person. It's the caterpillar motion. A bunch of new listings come on the market, then they get eaten up and the back catches up. So you got like this kind of movement that isn't very smooth and fluid. It's kind of this sort of lurching type movement. And when we look at our days on market graph, it's really interesting about that. That's exactly what we see, right? We have a week where the number went up by a couple days. And again, this graph is pretty zoomed in. So like this movement is like 3 days on market. It's not a huge movement. We see this kind of seesawing type effect. And even here, we saw it actually in our $1 to $2 million category as well. Now, of course, there's really two things that could be happening. If your days on market increases, either A, this is an indication that the market is softening to some degree. So that's number one, that it could be right. And the second thing is it's an indication that people are starting to buy older inventory, meaning that there are homes that might have been passed up, they back to the railroad tracks. There's high voltage power lines running in front of them. They're in a bad location on a busy street, like all these kind of things, right? And that maybe that house sat and now the inventory is constricted enough, or maybe they had a price reduction. People are starting to look at those homes and they're actually starting to go into escrow on them because there's not a whole lot of other things left over. I actually think it's the latter in this case. I don't see anything to indicate we are in a glut of a market, right? Our inventory levels are very low, which is something we track in our first time home buyer market update, which I highly recommend you watch. That one comes out on Fridays. Perfect for heading into the weekend. But we track overall inventory, and really single family inventory has just done this the last, say, 6 weeks or so. Inventory is literally down probably 25-30% from where it was even a month and a half ago. So I think there's a lot of this sort of, there's not a lot of listings for people to grab. We get some listings, then they get all bought up until the next week. There's that 1 week delay from when a house goes on the market to when it goes under contract, right? It gets shown, multiple offers, negotiations, etc. Anyhow, we're going to finish up with our affordability here. And our affordability, and if you look at this, really we're hovering right around this 90% level. And just as a reminder, what this means is we looked at the payment on a median priced home back in June of 2018, and then these numbers are all relative to that. So in our whole market for Orange County, single families and condos, we are still below 100%, meaning it is still cheaper today to own that median priced home than it was back in 2018. If you do watch our first time home buyer blog, one of the things that you notice is that this is a bit less true in the entry level homes. They have actually seen a bit more appreciation relative to 2018, at least in terms of those payments. They are more like on par with 2018. We opened this up and I put, I talked about, can we have a market that's really great for buyers and sellers at the same time? And I think the answer is yes. And this is one of those markets, in my opinion. It's not easy to be a buyer right now. In fact, I think it's very hard, though this might be one of the easiest weeks that we've seen all year, other than towards the beginning of the year. I definitely think it's one of the easiest weeks in the last 6 months. And likewise, if you're a seller, right now there's very low inventory. It means that if your home is attractive but has sort of like these little things, or I love an agent put, if your listing has some dirt on it, to describe little things that are unattractive maybe about a listing. Now's really a great time to be on the market because, yeah, it's a little bit softer, but it's not really soft at all. It's relatively softer. So if you're a buyer and you're waiting for a low point, this is it, but it's still not really that much of a low. And if you're a seller, you haven't missed your chance. There's low inventory and there are buyers out there. They are trying to buy houses. They want to buy houses. This is a market that is still very much tilted in your favor in terms of leverage. And what that means is people always think that when it's a seller's market, that seller's market means you get whatever price you want. And while pricing authority is definitely one of those things that you do get in a seller's market, really there's a lot of other kind of benefits that you get as a seller. One of those I just described, if your home is a bit of a scratch and dent special, it's not perfect, you're in luck because buyers are more willing to overlook that in a market like this. But the third thing, and I think this is really important, is that if you're a seller, especially a seller who's looking to buy another house, in a market like this, you get to dictate your terms. Our last two listings, we negotiated 60-day rent back contracts for our sellers. This means that even once the property closes, they still have 60 days in the property so they can look and relax and not feel super pressured on finding the next house and feel like they have kind of a proverbial gun to their head to find something quickly. And that's really a wonderful thing to have a market like this where you have a buyer who's on the line and they're willing to give you those kinds of terms. Anyhow, I want to thank you again for watching. Happy holidays, Merry Christmas, Happy Kwanzaa, Happy Hanukkah. Again, if you don't watch our first-time home buyer videos, you should definitely do that. They come out on Friday. They're on our YouTube channel. Definitely like, subscribe, and hit that notification bell. We also have another podcast episode coming out soon, so keep an eye out for that. And we'd love to hear from you. We'd love to work with you. Stephen Mead for Domicile Real Estate. Have a great day.